please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Today is a big day because the JPMorgan Third India Investor Summit kicks off, and we have an array of guests from this securities company to speak to us. In a minute, we will be speaking with Sunil Garg, the head of institutional equity research. We will also have Jahangir, the head of economics research later on in the morning. And then, of course, we have James Sullivan, their head of Asia ex-Japan equities, Pedro Martins, the managing director of global research, Filippo Godi, the head of markets and investor services. I could go on. We have a long list of guests from JPMorgan who will be joining us. But to kickstart the JPMorgan conference and what we expect from there, Sunil Garg, head of international equity research, is there for you on your screen. You can see him. Thank you very much, Sunil. Sorry to pull you out at an hour that will be very busy for you out there. But, the markets are looking so roiled. How uncomfortable are you with this emerging market sell-off? Do you see that continuing?
So, Lata, first of all, thank you for having me on the show. And I guess before we talk about emerging markets, I think it's a sign of at least our confidence in emerging markets, and in particular in India, that, very, very pleased to have our third India Summit in Delhi here. And I think the conference continues to grow each year. We've got leaders from over 80 companies and investors from over 200 investors in Delhi here, along with policymakers and government officials. So we're really looking forward to a positive conference. Now, obviously, the backdrop, as you mentioned, I think it's been a pretty rocky last few months for emerging markets. In fact, I think emerging markets since the peak in February are down nearly a quarter, and currencies playing a big role. It clearly is some cause for concern because we've lowered our estimates in terms of target price for MSCI Emerging Market Index and also some of the EPS numbers. But the fact remains that emerging markets are very cheap, and in fact they're trading at a much wider discount to historical averages. And that at least provides a value floor in emerging markets. So overall, we are positive. I think the big driver here, it's going to be China, because China has been a massive underperformer. So it's not just some of the Latin American currencies that have been weak, but it's China's equity market that has been dragging down EM performance. China's obviously, on one hand, there are trade tensions which impact, but it really is their domestic stimulus which we think will come through. But China is the big call here on EM. So overall, despite all the pressures, we're positive and looking for EMs to bottom out from here.
Okay. Sunil, hi, good morning, and thanks for joining us on the show. You said you've lowered your MSCI Emerging Market Index target. How much have you lowered it to? And what's your view on MSCI India? How do you see it shape up over the next, say, 6 to 12 months?
So our MSCI Emerging Market Index, we've lowered it by about 8%. So 1130 is our target versus where we were about 1230 earlier. I think India is an interesting story where it's been a very strong outperformer both in an Asian and in an emerging market context over the last many months. But that's started to come under some pressure more recently. And I think we do have some reason for caution. First of all, we've had a very strong performance from here. I think in terms of where our Nifty targets are, it's probably a relatively modest upside at this point in time. If you look at some of the high-frequency data points coming through, whether it's PMI, whether it's rainfall, whether it's the pressures from oil prices, I think these are going to be acting as headwinds. And we think the consensus earnings estimates are probably a bit too rich. They're about somewhere between 21 and 25% for either MSCI India or Nifty, and we think it's going to be closer to 15%. And we've seen a EPS downward revision trajectory come through. So I do think that at a market level, we're probably in for some headwinds in the short term, which is why we think it's probably better to look at bottom-up opportunities.
Okay, Sunil, hi, good morning. That's interesting because you're saying perhaps you should be looking at bottom-up opportunities. For Indian market, there's been two legs of a big bull market. There's consumption and the companies that finance that consumption, and both have seen quite a bit of correction over the last few weeks. You reckon they could correct more from here?
So, look, I think financials are still not a very attractive sector in the Indian market at the moment. In fact, I think financials have struggled pretty much everywhere globally, even in developed markets, and that's not one of our preferred sectors. And interestingly, if you look at consumption, then the discretionary part, and particularly the automobiles, have been a lot worse off. So I think there's probably interesting opportunities in sectors like healthcare. Now, that may not necessarily be a domestic consumption story, but that's also been a very large underperformer if you take a one-year context, and I think that looks like one of the better opportunities at the moment.
Okay. Sunil, more particularly in India, we have seen a very sharp rise in bond yields to about 8.2%, the Indian 10-year. At least 50 basis points higher than what it was a month ago. Today we see the US bond 10-year clocking 3.05. How much worse does the cost of capital get, and will that add fresh reverses to the financial sector?
So I think very clearly, higher interest rates do, have an implication in terms of the cost of capital rising for companies. We actually think that higher bond yields are a sign of confidence, and typically, historically, and particularly in developed markets, they've been associated with better equity markets rather than the other way around. So in some senses, we are seeing a interest raising cycle pretty much everywhere. I think our concern more recently has been a flatter yield curve, so if bond yields are rising, I think that's actually a better outcome. So yes, it does raise the cost of capital, but if it is accompanied with a better growth outlook, then I think that's net-net a better outcome. So we actually think higher bond yields are going to feed through into a better outcome.
Okay, that's interesting. What about flows, Sunil? In your interaction with foreign investors, how is the mood with respect to investing into India now, especially considering the way the rupee has moved? Would you expect more redemptions from FIIs?
So I think the overall sentiment for India is, not unscathed from the softening of the stance on emerging markets. And as I mentioned earlier, with a 25% decline over a 6-7 month period, I think some of the confidence in EMs have been shaken, and we've seen redemptions come through. And again, more recently, the rupee, which was largely stable over the last month or so, particularly in August, has been one of the worst performing currencies. So there's definitely weighing on the sentiment. I think overall emerging market positioning at the moment is light. And I think India is, as I again mentioned earlier, has been one of the stronger outperformers. So, there's clearly a possibility that as investors get more comfortable with emerging markets, it rotates into markets that have massively underperformed. And that would be places like China and some of the CEMEA and the Latin American markets.
Okay. Well, Sunil, generally what is your preference within India itself? Are you only sticking to consumption, or are you looking at more dollar-denominated stocks or dollar earnings stocks like IT and pharma? And by the way, does the rupee worry you at all at 73?
Look, I mean, obviously the pace of decline combined with oil prices, which are nearly at $80, is clearly a bigger impact for India than perhaps for many other economies. So I think as a result of that, the current account deficit itself is going to widen quite substantially from just under 2% to nearly 3%. So it clearly is a headwind. One can't deny that. But I think if we take it in the context of how much other emerging market currencies have declined and the pressures they've had, I think some of this was, par for the course. So yes, it is something we see as a headwind for the market, but it's not something which gives us, huge concerns. But when combined with a very strong outperformance and some of these headwinds building. That's the reason for some of the headline caution on the market. Now, I think if we look at, where we are looking for, better placed sectors, I think it really is, the cost of sounding boring, where we see better growth opportunities. Now, two of these sectors that we like do have dollar-denominated earnings, healthcare and tech. So, but I think it's not just that. I think we've also had, as I mentioned, in healthcare, you've had a period of large underperformance that is reversing, and so but they tend to be dollar denominated. The other space that we like quite a bit is materials, so that's looking like in a pretty strong shape. At this point, financials, which is usually one of the reflections, one of the opportunities to play a domestic story, is not something we're very bullish on at the moment.
Okay. But coming back to your earlier stance on the markets, there have been a lot of downgrades that we've seen in India of late. And in fact, the FI holdings into India is also down from an all-time high. JPMorgan is still relatively bullish. Why is that?
See, are we talking about India or are we talking about global markets?
India.
India.
So, I mean, our index target has about 7-8% upside. Now, is that, ultra bullish over a 9-month period? I think it's not a bearish view, but I think the markets, got a bit of a, I would say, volatile time ahead. I think you've also got an election year which poses some headwinds. So I think relative to other emerging markets, there are headwinds that we're seeing here. We're not bearish on India, but I think the index, having delivered such strong performance at the aggregate level, is probably going to struggle a bit from here.
Okay, Sunil Garg, well, that's cautious but still optimistic, I would think. Thank you very much for joining us. Have a great conference out there, and we look eagerly forward to your other guests joining us, your other colleagues joining us.